Hi there, I'm Dean Heskin, and thank you for tuning in to our podcast, The Secret War on Cash, brought to you by Swiss America Trading Corporation, where we take a good look at some of the things that are taking shape in the financial markets. And we're going to get right into it today. The big news currently is what's been happening with the price of gold. It has been on an absolute tear. It's been happening for the last several years, actually. And this is this first article here my co-host and I, Chris Agelastos, are going to discuss. Gold price hits a new record high on a weaker dollar and expectations of U.S. interest rate cut. Well, we've heard that first part of that headline there, Chris, numerous times over the last few years, how gold prices have been hitting new highs. And now there is this talk that it's inevitable that we are going to have an interest rate cut. And with that interest rate cut, what's expected is that we're going to see a resurgence of inflation. Worse yet, actually, many people are looking at strong probability or possibility of stagflation, which basically means higher prices and no growth in the economy.
hmm
So gold price is over 3,500 an ounce now, and this is probably just a stopping point, several are saying as well, on the way to even higher prices just within the course of the next few months of this year, if not the rest of this year in the first part of 2026. So tell us what's happening, and are these interest rate cuts? Is this really something that we can expect to see?
Yeah, I mean, they're stating a 90% chance that we see a quarter percent interest rate cut, and we could even see more. I mean, I think anybody who's been paying attention to this has heard that President Trump has not been too happy, to put it lightly, with Jerome Powell and the Fed. For not cutting rates. They've put it off longer than a lot of people think they should have, and so there's a real high probability in everybody's estimates that we're going to see at least a quarter percent and maybe more throughout the next several months. And add to that, I know you know this, but typically fourth quarter in the year we usually see pretty strong gold growth as well, even without cuts like this. So that's
Right.
definitely the direction that we're heading currently, after already seeing about 30% growth year to date, which is huge.
Well, and yeah, and there's definitely, in fact, they're saying here right here in the article that traders have already kind of factored the rate cut into the pricing of things, uh,
Mhm.
suggesting that there's like a 90% chance of it on the 17th, so not too many days away.
Mhm.
And the bottom line is that it just speaks to yet again all of the various fuels that are fueling the gold prices and the gold marketplace, meaning central banks setting records in terms of how much gold accumulation they've done, institutions and investors, how much gold that they've purchased. Now, again,
Mhm.
you have this shift in terms of what's likely happening with interest rates, and it's why it speaks volumes to just the reasoning or the rationale that the average person should be invested into gold. And I would
Yeah.
encourage those who are tuning in, if you have not put yourself diversified yourself into a position in gold, to do so now. I mean, we've been saying it since gold, good lord, when we started this podcast, Chris, I think it was 2000 an ounce, maybe 22, and now we're at 3500,
Yeah.
and this is just a couple years in. And but not don't lose heart, because this is probably, as we mentioned a moment ago, just a stopping point along the way to much higher moves in the price of gold. And if you want to learn
Yeah.
more about it, you'll see in our show description there, you can call us or text us at 1-800-289-2646. You can go to our website at www.swissamerica.com. Ask for some information if you want to contact us and have a conversation with someone. I encourage that as well. Get your questions answered, understand the market, because the market is something that not only could give you something that is a good hedge against the uncertainties out there, but it's proving to be one of the best performing asset classes out there, and it'd be one of the best performing assets in your portfolio. Now, with that said, let's get into our next article here out of ABC News, which just kind of piggybacks on this.
Mhm.
How they're saying world share slip and gold sets a fresh record high over 35.50 an ounce. And again, it's becoming very routine almost at this point to be hearing this kind of news. And, right from the article here, this coming out of Bangkok, the second paragraph, the spot of price gold, traditionally a haven for investors in times of uncertainty, climbed over 35.78 per ounce on Tuesday, which surpassed an intraday record of 35.09 that was set in April. Slipped back a little bit, but again, it is a momentum that just continues to build. And then a couple paragraphs down, silver, same thing. They tend to be sympathetic metals. They move kind of in tandem with one another. And
Mm.
silver was up 1.8% to over 41 an ounce. So
Yeah.
that's the first time that's happened since 2011.
Right.
And I guess, Chris, a question I would have for you, because you talk to clients and prospective clients really all day long. And for those who you talk to who are not getting into the marketplace, why wouldn't a person get into gold right now, or silver for that
Yeah.
matter?
Yeah. I think for most
Or why
people,
aren't they? Why aren't
right.
they would be?
Yeah, I think for most people, it's just if they haven't already, it's because it seems different to them or foreign. Most of us, the typical person puts money aside in their 401k or their IRA, or maybe squirrels a little bit away in their bank savings. And most of those traditional outlets don't really educate consumers on tangible assets. They're typically pushing typical mutual funds or maybe ETFs and traditional stock market investments. And here in the U.S., that's why our stock market is so big, is because people really only have that as an option as far as they're aware in their day-to-day investments. So really, it comes down to education. And like anybody, if something is foreign to you, if you don't really have an understanding of it, or maybe even know that it's an option, you don't know what questions to ask. So that's where I would say, reaching out to us to get a little bit of information. Walk before you run. We're not telling people to just send us checks. It's request some information, have a conversation with some of our staff here so that we can explain the pros and cons and how it works. I find that most people, once they set aside 30 minutes or 45 minutes, if it's a little more detailed conversation, and they understand the basics, stepping into it and making a small transaction is super easy. And most people, that's what they're saying after the fact, is it was way easier than I thought it would be, and I wish I would have done this sooner. So I think taking that first step and reaching out is key.
For sure. And it is something that it's and I know this, be as a company, Swiss America, we've been around for over 40 years now.
Mhm.
And how many times over the years that I've heard it, personally speaking, being at the firm now for 33 of those 40, I think 43 years in total. The So many people are like, gosh, I didn't realize just how easy this was. It's one of my, it's kind of become like their staple investment in their portfolio. The interesting
Yeah.
thing is the majority of people that we deal with, their holdings of gold, silver, coins, things of this nature, they didn't do it per se for investment purposes. They did it as a hedge, as a what
Yeah.
if there were some problems with our financial system shutting down like it did during 9/11, or if we had like a crises on our banks where there was banks closing their doors or disallowing depositors to have access to their funds, things of that nature. That was the main initial motivation, but now they found it to be, again, a cornerstone in terms of performance in their portfolio, where when they've had areas of deficiency in terms of growth, their metals have made up for it. So thank you
Yeah.
for that information, Chris, and thanks for you tuning in. As we mentioned a moment ago, at that toll-free number, 800-289-2646. You can call or text us or visit us, online, and get all the information you need, questions answered, etc. So thanks for watching. Thanks for tuning in. And if you're not subscribed, please do so. Follow us on social media as well, as we'd love to stay in contact with you and bring you more valuable information. Have a great rest of your day. Chris, thanks for the news, and we'll see you real soon.
Yep. Thank you.